Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Friday, July 2nd. Thank you so much for joining us and being here with us as we head into a long holiday weekend. I'm your host, Jesse Allen. Find us online, markettalkag.com. That's our home on the web. The latest in ag news, market information, all of our streaming sources, including Apple Podcasts, Spotify, iHeartRadio, our YouTube channel, and much more. It's all online, markettalkag.com. All of our great radio affiliates across the country, from Texas up to the Dakotas and everywhere in between. Find all the information online, markettalkag.com. Well, a down day in the grains here today as we head into the weekend. We'll talk about all of it and some of the reasons behind it. Let's bring in our good friend Ted Seifried with Zaner Ag Hedge joining us this afternoon. Ted, great to have you on Market Talk here as we head into a long holiday weekend. And apparently the trade decided we want to take a little more profit here heading into the weekend, Ted.
Yeah, not terribly surprising either, Jesse. This holiday weekend, this 4th of July holiday weekend, has a long history of being a trend breaker, whether it be the weather trend or the market trend, or technically, I guess you could say both. Whoever had been long going into that report that we had, and, the limit up move in corn and the 80, 90 cent higher move in soybeans, maybe take a little bit off the table. Also, though, there is a little bit more rain in the forecast. And as we get closer to it, what we're looking at is that basically Monday through Wednesday timeframe. As we're getting closer to it, the confidence is growing a little bit. Now, from what I'm seeing for totals and things like that, I don't know if it really is enough to make a difference in some of the drier areas. Sure, we'll take whatever rain we can get. But at this point, we're so far behind. 0.4 of an inch isn't going to be a game changer, So really what's going to happen is, when we get back for a traditional old school Tuesday morning pit open, basically 8:30, off to the races, no night session. I'm kind of excited about that. I like that. But when we get back Tuesday morning, it's all going to be, okay, what did we see? What happened weather-wise over the weekend? And what do we have in the forecast going forward? Because then we'll be looking into the time frame for pollination for most areas. And if that forecast is threatening, like I think it could be, we can get kind of crazy next week. I would think. I think what we saw on the report on Wednesday was just sort of a precursor of things to come if we continue to be concerned about weather. And let's talk about weather a little bit. I'm not a trained meteorologist by any means. I've been watching weather since I've been doing this for 16 years now. So I will say I've looked at a fair share of my weather maps and so on and so forth. But what we've got going on this year is sort of a unprecedented meteorological event. And it's not sitting over the Midwest. What it is it's out in the northwest corner of the United States. It's a unprecedentedly strong high pressure ridge, or dome of death is what we would call it if it was over the Midwest, because this is a system that sets up, and it takes a major event, a counteracting event to move it out of the way or to dissipate it. And when it's in the middle of the Midwest, we think, okay, it's hurricane season, maybe we can get a hurricane to go right up the alley, right up the Mississippi River basically, and break that up, split it in two and dissipate it. And in fact, in 2012, that happened. It happened late, too late to really do anything for crops, but it did happen eventually. But where that ridge is, I don't know what's going to get there. It's not an area we typically see hurricanes. And it's also, when you look at the southwesterly flow of the jet stream coming out of Canada, that's an area that it usually stays above, and then it dips into the plains, into the Midwest, and then goes back higher. That's sort of kind of propping that up and keeping that north or southeasterly flow higher. But that's not, I don't think that's going to take that ridge out. Now it's going to strengthen and weaken and strengthen and weaken like these ridges do. And that's going to allow for some shots of rain to come in here and there. But I think we're going to be moisture deficit with really impressive heat. I think that's going to stick around probably until we get to, mid to late September. That's just my take on it. Again, take that with a grain of salt. I'm not a trained meteorologist, but if that trend doesn't change, you look at the Dakotas planting 15% of our soybean crop. You have to be worried about that. It's not quite 11% of our corn crop, so it's a little bit less of corn, and we could make up for it a little bit more so on corn and some of the other parts, some of the other areas that are really looking very good. But even, when I look at corn and I look at the USDA's 179.5 trend line yield that they're using on their balance sheet, that'd be a new record by 3 bushels an acre. And is this the climate that we see a new record yield in? I see that as being a real long shot. That's maybe the absolute best case scenario. If weather were to change dramatically, rains were to overperform over the weekend, and then, we're looking at a much different outlook when we come in on Tuesday, maybe we can get the trend line. I have a really hard time seeing an above trend line yield. In fact, I'm going to say I have a hard time seeing us match the previous record that we have, which is 176.5. So that'd be down 3 bushel an acre from where the USDA is right now. And my best guess would be, well, if this weather pattern doesn't change, then, okay, we're going to have some really good stuff in the east to help make up for it. But I don't know, maybe we're 6 bushel an acre off. And if we do that, combined with the increase in acres that we just saw, and that increase in acreage wasn't nearly as much as what the trade had been expecting, well, then we're still looking at a billion bushel carryover, potentially less if demand comes in a bit stronger, a little, just even slightly stronger than where we're at right now. So the market has to be concerned about that. We have to be a little bit worried about allowing too much demand to come back into the market, which is going to keep a fairly solid floor underneath us. And the longer the weather pattern persists, the more concerned we get about crops, and not just the Dakotas, but start looking at Minnesota, the western half, or maybe even 2/3 of Iowa, depending on how this plays out. Nebraska, 60% under irrigation, but that dry land. If we start thinking that we could drop more than 6 bushel an acre off a trend line yield, which again is, I think, too high. That trend line yield is corn seems to have kind of plateaued with these yield jumps that we had been seeing. So if we start thinking we can drop more than 6 bushel an acre, then we really have a scenario where we have to fairly aggressively price ration some demand. And corn's getting up to pollination really rather quickly. So the change would have to be really soon. Otherwise, we're going to start getting more and more worried about that, 6 bushel an acre. That's the line in the sand for me. And so if there's going to be upside potential in corn, it could be pretty dramatic and it could be pretty soon. Soybeans is a little bit more of the longer term thing. We have more time, supposedly, although I've seen some stuff in North and South Dakota that's just, I don't care how much rain they get. I don't see that coming back. I just don't. Maybe I'm wrong about that. I'm also not an agronomist. I've spent, more than 16 years kicking around looking at crops, but who knows? But at least the market right now is kind of saying, okay, well, we can't do anything with the soybean yield yet because the beans are made in August and we won't know what the August weather is like for a while yet. And so we're reluctant to really go to the races in soybeans. But if you look at the balance sheet based on the acreage not improving, in fact, coming down ever so slightly, if that demand's there for soybeans, which I believe it will be, we're looking at a tighter balance sheet than what we had this year, which basically is saying that we're going to run out of soybeans. At least, there's a very strong potential of running out of soybeans. So we have to be very careful with how much demand we could have. If we're not price rationing already, we're going to have to do more work to do that, I would think.
Very, very true. Well, and, on the weather side, it's the case of the haves and have-nots, right? You draw a line from basically northeast Iowa to the southwest quarter of the state. You go east of there, we've had plenty of rain, probably too much rain in some spots. You go north and west of there, we're dry. And like you said, 0.4 of an inch, half an inch of rain is not really going to do much. We need a good
Right.
weather pattern change. And I've been watching different stuff. Eric Snodgrass's updates, I watch his quite a bit. And, he's confident rains, but it's not looking like we're going to have a ton there. And, I talked to a farmer in Northwest Iowa here the other day, and I brought this up on the show yesterday. He says, we're dry and I'm worried. And I asked him, how much have you marketed, if anything, for the new crop? And he said, I've only done 5% corn and maybe 10% beans because I'm just worried about producing a crop at this point. And he says, I can't afford a margin call if this thing does flip around. I mean, it's, I think it's when you're marketing, it's kind of that case of where that weather line is. If you're in the north and west, you're probably not marketing as much because you don't know what you're going to have for a crop. If you're east of there, you might have been a little more aggressive. Is that kind of what you're hearing along the lines from different producers, Ted?
Well, yes, absolutely. There's definitely a difference between the haves and have-nots and the different approaches that you're going to want to take for marketing. But, for those have-nots, that's the one that's a little bit of a trickier situation. I guess to help us with this conversation, I'm going to put my thinking cap on here. Hold on.
We got to bring out the thinking cap.
Yeah,
I
it
love
had to
it.
happen at some point. So I don't even know if I get the whole thing in the shot, right? I'll do this. So here's the thing. You're going to have more than 5% of your crop, likely. I mean, it's not going to be a complete failure. Look at 2012. I mean, yes, we were down dramatically, but, most of us had a crop. Even if you have a field that gets chopped, you're going to have something. I think you can comfortably go over 5% on your sales, right? I would go to 40 to 50% potentially, whatever your comfort level is. But your comfort level, in my opinion, should be more than just like 5 to 10%. You get there, but you own calls to re-own that opportunity. We talked about this last time, Jesse. I think this is the play. This is the way, whether you're a have or have not, you use your cash sales or you use the board, selling futures on the board, HTAs, let's call it, to manage your downside risk. You manage your upside potential by using calls and call spreads, things like that. In a perfect world, you put the calls or call spreads on before you make your sales, and you're making your sales at higher prices. If you want to play around, that's something you can shoot for. But even if you're doing them at the same time, it's when you're at these prices, Jesse, the risk is most certainly to the downside. That being said, when we talk about our have-nots, and again, that's what we're focusing on. Those calls do two things. One, it gives you upside potential, but two, it'll help you. If you have to either roll, which could be a pretty penny, or you have to buy out, you're going to want to have that upside possibility, because if markets go crazy and you're having to buy 750 corn back or so, well, it'd be nice to have taken something out of the market to use that to help you roll your contracts farther out on time if they allow you to do that. Or worst case scenario, you have to buy yourself out of wherever you sold that corn, HTA, or however, just straight up cash sale. Having those calls will help you buy out of that. So I think that's an important part of a marketing strategy is, where does your risk lie? And this year, the have-nots do have the risk of coming up short on a crop for bushels that they have already sold. If you had a guy that thought he was sold 50%, now all of a sudden he's 120%. Well, okay, that's you really want to have that upside potential. You kind of need it, right? So this is a great year and a great example of how that strategy can really work well.
Ted, as well on the wheat side, I know we got a question in on Twitter, and we've been watching this Minneapolis market just going higher with the dry weather in the Dakotas. We know that crop is just it's baked. It's pretty much done. It's done. We know it. Adam Bettenhausen on Twitter, hopefully I'm saying that right, 2-star farmer on Twitter, he said, what's the record widest spread between Minneapolis and KC wheat? Are we on track to break it? Can KC hang if corn stalls? I mean, I don't have that number in front of me. I don't know if you do either, Ted, but just looking at this wheat market overall for our wheat growers, especially our spring guys, I know there's a lot of concern with that crop right now.
Yeah, absolutely. And Jesse, I didn't have time to go do the math on that. But, spring wheat is a kind of different animal right now, right? I mean, we're in the middle of harvest for the winter wheat, which should put pressure on us. And we're seeing that pressure here today. But part of that's because the row crops are down. If the row crops were a lot higher, the wheat's going to kind of try to follow with. But then you look at July Minneapolis wheat. I mean, albeit, there's only 65 contracts in open interest, but that's up 20 cents. But I like to watch contracts in delivery period because I think that's kind of telling of where uh, where the demand is. I mean, if guys are willing to try to force delivery on something that like that at 850 almost, you think that the September can get there as well, especially if the weather persists, which I think it will. And to this point, I feel like a lot of damage has been done in wheat. So spring wheat has the potential to just kind of march to its own drum. I think that spread, the widest it's been, has been a little bit over 3, maybe 340 or so, if my memory serves correct. Don't quote me on that. But I can see us challenging that record pretty easily. I think I can make the justification for somewhere around that 340 to 360 Minneapolis trading over Kansas City or Chicago even, for that matter. But yeah, I don't know how the spring wheat doesn't go a bit higher given the weather that we have, the conditions that we have. I mean, the conditions that we have are the worst they've been, I think, since we started reporting crop conditions. So and overall, I'm still fairly bullish wheat. Part of that's because I'm bullish corn and soybeans, and I think there's more upside potential there as long as there's not a weather pattern change. And a rising tide lifts all ships. I think there's a lot of reasons to be bullish everything else. And again, even the wheat balance sheet's getting tighter at this point.
Ted, let's switch over to livestock. I want to talk hogs real quick. We got some rumors in. Yeah, I wish you had a hogs hat. That would work great. But I mean, hey, hogs eat corn, right? That's one of the feed grains. So, talking hogs, though, we got some rumors in the market yesterday.
Yeah.
Very unconfirmed rumors, a lot of skepticism around them, but it apparently seems to have influenced our trade here the last couple of days after we were trying to find some stability. Rumors of ASF, maybe, again,
Yes.
unconfirmed. Just a lot of things out there, and it seems like that's just put fear into this hog market. Is that what you're seeing, Ted?
Absolutely. ASF is the scariest thing we can think of when it comes to hogs, for sure. And specifically, ASF here is the scariest thing we can think of when it comes to hog. It's one thing to be in China, that's scary too. But here, that's a very, very scary thing. And not only here, but where these rumors were centering around, talking about Iowa, for example. That's really scary, right? So, limit down. That's what yesterday was. We've tried a couple times to come back today, and then the selling comes back in. And the thing about rumors, Jesse, is more often than not, when there's smoke, there's fire. So we take rumors very, very seriously. However, this specific one, I think, was a sort of a case of mistaken identity. I think somebody saw something and thought it was one thing when in actuality it was not. In particular, and I'm talking in generalities because, it's a rumor and I can't be spreading any of that either. But, the different agencies will do readiness procedures for things like ASF. And if the wrong eyes were to see that, it would be very convincing that, hey, this is the real deal. But in actuality, it's just practice. It's just something that we do to prepare for if this sort of thing were to happen. And I think that's what it was. From everything I'm hearing, again, it was a case of mistaken identity. You have government agencies saying, multiple government agencies saying, no cases, not here. That's not what that was. So I feel fairly comfortable. I mean, again, with these sorts of things, again, when there's smoke, there's fire. It's just a phrase that keeps echoing around in my head, right? But I feel fairly comfortable that this was just a rumor that is not ever going to be confirmed. It wasn't a real thing. And I think the hog market will recover from it as long as it was just a rumor and there's no truth behind it. That being said, I look at the August hogs, 99.50. Maybe this created an opportunity. I mean, as a hog producer, that doesn't feel good. The last 2 days certainly don't feel good. And especially that rumor makes you really nervous. But, we got a big gap on the chart up at 112 on those August hogs. Fundamentally, rumors aside, I think we have reason to go fill that. I'm a little worried about the number of animals that we're going to have late in the summer season. I'm more interested in the October contract at this point. at 83.92, just short of 84. I think there's a lot of upside potential in that October contract. But I really feel like our domestic demand is going to stick around. And I don't think our export demand is really going anywhere anytime soon. It'd be great to see China come in and buy a lot more, but their prices have been down, and that's really what caused the triggered the big break in the market that we've had. But I think we've priced that in at this point. And if anything, I think the Chinese will chew through cheaper pork supplies very, very quickly. I mean, they love their pork, right? It'd be like saying, hey, T-bone prices at our grocery stores are cut in half. What would we do? We'd be buying twice as many T-bones. I know I would be, at least. Or bacon prices for that. You say bacon prices are down by half. Okay, I'm going to buy twice as much bacon. That's how I work, right? And the Chinese do that with pork, right? So I think that comes back. I think that's already been factored into the market. I think there's upside in hogs. The cash index doesn't suggest that the break that we just had was really that justified in the first place. So I'm looking for us to recover and bounce back. But at the same time, like I said, I'm just really hoping the rumors are not true.
On the cattle side, briefly, cash trade this week's been steady to even slightly lower in the South. One of those things. We continue to see product prices fall. Those cutouts just keep taking a hit. But looking at this cattle market, fairly quiet heading into the long holiday weekend. Any thoughts you have in cattle here as we head into July?
Yeah, when product prices fall like that, that's usually not a good thing because we're worried about Packers margins, and we're worried. I mean, I'm not personally worried if the Packers are making enough money or not. What I'm worried is that if they don't feel like they're making enough money, then they're not going to pay up for cash. So that's why we worry about that. I still think they're I look at their profit margins; they're still really quite good. I still think there's more room for the upside in cash. Now, with product prices coming down, maybe that room to the upside isn't as big as it once was. But ultimately, I think our domestic demand is going to stay very strong there too. I see those prices coming back. It was nice to kind of have beef on sale for the holiday, right? But then you come in with a whole bunch of demand and that chews through some stocks here up front and we go higher. Part of that is because we had a lot of cattle go to the market because some of these drier areas, you're left with the decision of, do I ship in feed from somewhere else that's going to cost me a lot? I mean, has anybody seen price of corn lately? Or do I go to market? So you get some supply hit the market, in short order. We got to chew through that supply, but that just kind of leaves a little bit of a vacuum of production later on. And if that demand doesn't go anywhere, that pushes those box beef prices and everything like that higher once again. It gives the Packers just this massive margin once again, and then we'll be screaming and crying bloody murder if cash prices don't go higher, which I think they should be going higher right now. So yeah, I'm optimistic that longer term we've got quite a bit more strength coming in the cattle. I'm just hoping in the short term we don't get a bigger break below, say, 118 in the August, because that would spell a little bit of trouble. But I don't think we will. I think we'll kind of sort of continue to trade sideways here, see where we're at in a week or so. And ultimately, again, I'm looking for 132-ish in the August. Kind of a question mark of whether we'll get there in the time frame of that August contract, but I'm still looking for new highs in the August contract before that goes off the board.
Mm-hmm. Ted, any other thoughts you have for us? Maybe anything on the outside market side, or anything you want to reiterate here before we run out of time today?
Yeah, I always look at crude oil because I've got a lot of my guys that need to hedge their energies as well, and crude oil has been on a tear. We got the crude oil up over $75 for the first time since 2018 yesterday. I'm a little worried that we're getting quite overbought. I'm a little worried that OPEC now starts to say, okay, these are good prices. We're going to start adding more. So I'm looking for a break, but I would buy that break. I think the administration that we have right now is not very pro-oil. And if I got a chance to buy barrels of crude oil at 66.20 again, or even if it got down to 63, I'd be a fairly aggressive buyer there. So guys that haven't been able to hedge their energy needs, or even if you're looking for a speculative play, I'm hoping we see this break here in the fairly near future. Be looking out for an opportunity to maybe if you need to hedge your energy needs, or if you like to speculate in the markets.
Well, Ted, I know we got a long holiday weekend, of course, coming up. But once we get back from that, maybe some extra fireworks. And if producers need a little help and advice, they can reach out to you or the team there at Zaner Ag Hedge to get a little help, can't they?
Yeah, absolutely. You can reach me directly. Like my phone on my desk is 312-277-0113, right next to the corn hat. Otherwise, you can find us on the web at www.zaner, that's zaner.com. You can read a bit about us. You can also sign up for our morning Ag Hedge newsletter. And also, if Twitter is your thing, I am on Twitter. I'm at the Ted Spread.
Always a good conversation. We put that thinking cap to work here. A little extra overtime work today. Ted, appreciate the time. As always, thanks for joining us. Enjoy your holiday weekend. We'll talk again soon.
Thanks, Jesse. You do the same. I'm going to be dealing with corn dust here for a little while first.
Ted Seifried with Zaner Ag Hedge, our guest today here on Market Talk, brought to you by GrowMark FS. Find us online, markettalkag.com. Enjoy your 4th of July weekend. I'm your host, Jesse Allen, wishing you and yours a safe and happy holiday.